Hey, Thomas, very good to see you. Today we have a really important topic. We're talking about the tension with Russia and how geopolitical events affect the markets. Of course, right now markets are lower as investors try to determine what impact Russia's latest moves will have on the global economy. Investors are pulling their money out of stocks and into traditional safe havens like gold and bonds. And something that I think really tells the story here, take a look at asset classes year to date, Thomas. No real surprise here that we see oil at the top of the list, but what else stands out to you?
You know, that it makes sense right now with when you having the Fed having conversations in regards to raising interest rates.
Hmm.
So you can see the bond exposure, the decreases there. Obviously, Bitcoin is incredibly volatile, but it's no surprise that with the interest rates increasing, it's going to impact bond portfolios. So seeing bonds at the bottom of the pack there makes perfect sense.
Hmm.
Oil, obviously, the energy prices are going up, so we see a higher return in those positions.
And I know that you're really encouraging clients and you're designing very thoughtful portfolios around safe investments. So when we see, poor performance with bonds, what are traditionally considered safe investments, what are you thinking of instead then for your clients who need a little bit more security?
Yeah, so there's a couple of different strategies I leverage. Obviously, fixed index annuities is one way that I help my clients navigate, especially in risky environments like this one. When you have a lot of people that are fleeing from safety, it's kind of gospel with my firm. We say let's think about protecting what you've accrued over the last several years. Also, structured notes. Structured notes is another way to generate some income.
Hmm.
With those types of notes, there also are some downside protection. They have buffers, 10 to 20% buffers on those as well. So if I do have some clients that like the idea of fixed income, then we can give them some exposure to some of those structured notes. But obviously, annuities are a big play for me. Fixed indexed annuities, how I help my clients protect what they have and also to generate income in the future.
Okay. So let's take a clinical look here at
Mhm.
other geopolitical events because, Thomas, you have a team behind you.
For
And
sure.
so Brookstone CIO, Mark DiOrio, he
Hmm.
actually crunched all the numbers. He gave us this table to
Hmm.
see how geopolitical events affect the market. So the average 1 day decline, negative 1.14%, with a total event-driven drawdown of negative 4.39% over 16 days, and then recovering in an average of 35 days. And I think people will be surprised to see these numbers, right, Thomas? Because we think that, that it may be a lasting impact, but that's not always the case.
It's not. In fact, Aaron, can you lift your screen just a little bit so we can see the bottom there? I can't see the bottom of those numbers here on the screen.
Sure. Let me take away the banner. I can't take it anymore, though. I
Okay.
hope that helps.
Okay. No, we can't see it, but that's okay. Yeah. So thinking about the average time frame or the average 1 day fall 1.5%. The average drawdown over time is 4.5%, a little bit less than that. If you're a younger investor, makes sense, right?
Right.
But only an average. Every situation is different. This conflict is kind of unique. It's an invasion of another country. It hasn't happened in Europe since I think the 40s, since beginning of World War II. So we can look at the averages, but we do have to keep in mind that this can be something that's entirely unique and be an outlier. So I still advocate looking at safe places to put your money. However, if you're relatively young, this is something that you can possibly weather if you have a
Hmm.
long horizon in regards to retirement. 20, 15, 20 years, then you could afford a drawback of 4 to 10% or about 5 to 10% in your portfolio. But I still advocate safety. If you're in that
Right.
55, 60-year-old range and you're thinking about retiring here in the next few years, let's have a conversation about protecting what you have.
Hmm. And the other thing that I know that you always tell your clients is we just have to remind ourselves that we can't be making emotional decisions with our money, right? So safe investment doesn't mean burying it in the backyard, because often if you just pull out of the markets entirely, you
Mhm.
miss the best days.
For sure, for sure. And time is a big deal, right? Time is when you look at that first graph there. If you left your money in the market, you put $10,000 in there from 2006 till now, and you were able to take advantage of all the best days. That $10,000 would have grown to that 45K. If you were to miss the 10 best days, then that number drops down to 20,000.
That's
So
amazing.
that's more than half of what you
Right.
would have potentially gained. You lose by pulling your money out of the market. So I wouldn't make an emotional decision yet. In the event that you have that time, I would kind of sit tight and see what happens in the markets here over the next several months.
Mhm. And possibly, like you said, even buy the dip if you are not in or near
Absolutely,
retirement. Yeah.
absolutely, for sure.
All right, Thomas, thank you very much. This was helpful. If somebody though wants to talk to you, because like I said, this is a scary moment for a lot of
Mhm.
people, and I know that we are not minimizing the humanitarian crisis that's happening
Absolutely.
over there as well. What's the best way to reach you?
Definitely. They can reach me at Martin Heritage Group, LLC.com. That's my website. It's there at the bottom of the screen. You can also email me at info at Martin Heritage Group, Martin Heritage Group, LLC.com. You can also give me a call, shoot me a text at 651-503-6064. And then I'm on all social media
Yes, you
platforms,
are.
your
Yep.
Instagram, your Facebooks at Martin Heritage Group.
Lots of options. Thomas, thank you very much.
Appreciate you, Aaron. Have a great day.
You too.